Hello my fellow freedom builders and welcome back to the channel. In today's video I'm gonna have a look at ARK Invest. And I know that this kind of video might bring in a bit of heat. I know that it did last time. I think it was in the beginning of the year where I raised some concerns about ARK Invest and said that many of the stocks were actually starting in a downward spiral. And people were quite angry with me, but I will do it again. I know that some YouTube channels will pretty much only tell you that all hype stocks will keep going up. I might break the news to you today that it might not be that way forever. But let's have a look at it. ARK Invest, if you don't know them already, let's have a look at them. They are, you have pretty much been living under a rock if you don't know ARK Invest. They have been all over. They have predicted Tesla should shoot up in price, and they have a lot of ETFs, investment ETFs, that focus on different innovative and disruptive technologies. There's innovation and revolution and fintech, genomics, space exploration, next generation internet and so on, 3D printing and cryptocurrencies. I'm a big fan of that, and I really cheer that someone invest in these disruptive technologies. However, when we are looking at a chart of the ARK ETF, the largest or the most well-known of them, it has been going down, and right now it is at a point where it also was in October last year. So it is about 8 months worth of stock raises here, that are stock increases that have disappeared. Now it is important for me to say that I'm not predicting anything. So I have absolutely no idea if ARK Invest will shoot straight up from here or if it will go to zero. Well, zero, of course, will probably not be hit. But in today's video, I'll try to have a look at some of the perfect storm factors that I think are in play here. Because there are a lot of things that point in the wrong direction for many of the ARK stocks. First of all, not many of the companies that ARK Invest are investing in are producing any profits. I think it is about 2/3 of their investments that actually don't produce any bottom line. Now this makes perfectly good sense because they are investing in disruptive technologies, and these technologies take a while to get into solid business cases, so that makes perfect sense, and I actually don't have a real problem with that as long as it is disclaimed and open to everyone. However, something not so nice has happened because many of these are based on borrowed capital. And if we are looking into, let's just have a look here at the interest rates. And you know, if you have seen my videos lately, let's just have a look at it. It is here, the 10-year interest rate. The 10-year interest rate has exploded. It has gone from down here about 0.5% and then up to 1.75. Then we have a little retracement, and as you can see here, I've actually made a bit of technical analysis on the interest rate. Of course, this could be done just in the opposite for the bonds. So if we looked at the picture of the bonds here, they would just show the opposite pattern. But in the interest rate here, I've tried to draw down a little bull flag here. I'm not even sure it can be done. I've never done technical analysis directly on the interest rate before, or the yield. But as you can see here, if it starts to break up here, it could be quite a problem, especially if you have a company or you have a portfolio of companies that are highly leveraged, meaning that they are really in trouble if the interest rate goes up by 0.5% or 1% or 2 or 3%. And I know some of you said, when I made a video down here around the 1.1, 1.2%, and I said this could actually go to 2, I was pretty much laughed off stage because of course it couldn't. But right now we were up touching 1.76, something like that. And I predict that we could go towards the 2 or 2.5. That means if that is the case, and it's not even certain that it is, but if that is the case, then a lot of the ARK Invest companies could be in some real trouble and some heat that they're not able to dig their way out of. But that's just one of the things here. The interest rate is important. I know that both Janet Yellen and Powell and all the big shots in Fed and in the government have said that there's nothing to worry about. We had the job numbers coming out Friday, made a bit of a relief here. You can see this spike down here in interest rate. That was on the job numbers on Friday because they were a lot worse than expected. However, it seems like the market is actually they're starting to figure out that the inflation rate will go up, and it is going up, and it is already a lot higher than the official number, and that will pressure the interest rate upwards. I made several videos about that. So just to say, the interest rate is just one of their problems. Now, then another thing is that many of the investors that have jumped into the ARK Invest are retail investors. They have simply followed every single clue and lead that Katie Wood and ARK Invest have let out for them. And every time Katie went out saying, now Tesla should go to XYZ number, or now this specific, it could be a Virgin Galactic or whatever, every single time they have announced a stock purchase, then a ton of retail investors have just followed it blindly without thinking anything about the case. As long as ARK Invest bought it, it had to be good. And I'm not saying that it isn't. The thing I'm saying is that many retail investors actually started investing last year, or at least that's where they really started to make some profit. And last year, at least after February, March, when we had the big drop down due to the virus, last year was actually a good year to invest. So many investors could see 30 or 50 or 100% gains in their portfolios following ARK Invest and their setup. And that might be okay, but some of them may start realizing that it doesn't keep growing forever. Now, it is as if many in the investment environment, investment community are starting to lean a bit more towards companies that actually produce profit, meaning that they're starting to sell out some of their quite hyped stocks here, some of the disruptive, innovative stocks. Now, another problem is that many of these stocks are rather small. I know, of course, Tesla and some of them are large, but many of the stocks that ARK Invest have put their money into are quite illiquid, meaning that they don't have a very large market cap, they don't have a big flow of stocks in the exchange, and therefore, when ARK Invest are going in, first of all, they are buying a big percentage of the overall flow of stocks at all in the market. But then all the retail investors are following, and this actually makes it so that ARK Invest are producing a huge demand for a stock that is highly illiquid. It could be, we could take pretty much any of these, but when we work our way down the list here, we find some very small stocks here, and we can see, for instance, NanoString here. It went from it went from 14 to 88, 87, something like that. Great stock, but right now it is tumbling. Many of the retail investors came in late, up here maybe, and they have taken a huge nosedive in their portfolios right now. Most of the tech investors I'm talking to now we're talking private retail investors, they are at an overall loss in their tech positions right now. You might be sitting out there with a huge gain, and that's great for you. I hope the best for all of you. But the thing is that now, when ARK is running an ETF, they have to place the money they get in. When there is an inflow of fund, they have to place that in these stocks, and that is great and good as long as there is a positive and an overall net inflow into the ETF. But what we have seen lately, this is the RK, the in and outflows. As you can see here, November, December, January, February, here this year, 2021, there was an overall net inflow of money, meaning that they could keep pumping money into these small, quite illiquid stocks. I know they're not completely illiquid, but they're smaller than the overall S&P 500 stocks. But lately, and this is from March and April and here May, we have seen a net outflow. There was a couple of very high days here of inflow, but overall, let's just say these 5 or 6 days here, this is back from, when is it? I can't have any, yeah, the 5th of May. There was a 1.1 or $1.2 billion outflow of the ETF, meaning that people are wanting to get out of the ETF. That means that overall, I know they can postpone it a bit, but ARK, they need to go out and sell a lot of the stocks they are involved in. And when they sell, a lot of their followers are selling as well, meaning that many of these very illiquid stocks, they actually get an overall push downwards. That makes more people doubt the ARK, maybe unjustified. I'm not saying that it is justified, but a lot of people, when they're all of a sudden sitting on a 10, 20, 30% loss, they say, no, well, maybe this high risk was not for me, so they're pulling their money out, which it just enlarges the net outflow of money and the net selling of these stocks. So that is actually a real true problem for ARK. I know that they are out right now saying that they keep buying these stocks, and that is great. Again, they might have a fantastic case. It might be that in 5, 10, 20 years, some of these stocks are 1,000 doubled. I'm not in any way saying that they're not. I'm saying that right now, with the setup they have, many of the stocks where we saw some huge gains last year might have had their gains simply because of all the extra media attention. As you can see here, if you invested in ARK Invest just at the beginning of 2020, when we went into 2021, it was up 182%. So of course, Katie Wood were all over the media platform. That's natural. Everybody's talking about her. She is mentioned as the new Warren Buffett of tech stocks and whatever. That's all very well and great, but there are some trouble right now. And as you can see here, if we're using simple technical analysis, we can see first of all that we have an overall trend that is broken. That's not necessarily a problem. You can draw these trend lines anywhere you want. So some people would want to draw one here and saying, then we're in an uptrend here. I'm not doing that so much. But what I am doing is I'm looking at if a stock or an ETF starts to make lower highs, lower bottoms here, kind of at a resistance area. Right now we are kind of in an area where it is like the buyers and the sellers are fighting a bit here, but just as yesterday it seemed to be breaking down, and in the pre-market there's also some negative in the negative territory here as well. So if it breaks down here, it is a good question. The technical analysts, or many of them, trying to figure out how far will it go. And I can't tell you. I'm not kind of the predictive type. I don't have a crystal ball. But I would suggest that at least some would say this would be an area of interest. That brings us down in the 90s here. If that is broken as well, it is a good question where people will look for some support, maybe down in the 70s here. But the thing is that as long as it drops, it will keep bringing an outflow of money. People are getting nervous. And if we just take a look at some of these stocks here, I know Tesla has been in a downturn, a bit of an upturn. But if you go down the list here, if you've seen my Danish channel, I know not all of you are from Denmark, but those of you that have seen my Danish channel, I made a video about the sell signals the other day, where I showed that when we see this breakdown, the 20 SMA trying to get up again, but being rejected. Also, when we see the RSI here doing the same pattern below the 50 line, and we see an outflow of money from the stock, meaning this is the OBV, unbalanced volume, very simple volume indicator, but it can show us some good points here. So the CRISPR Therapeutics here, I would have had a sell around 160. I would not have touched it anywhere since then. And then now it is 100. It could also have turned around and gone straight up, and then I would have to have bought in again at a more expensive price. But right now we went down. The Roku, exactly the same pattern. Square is actually one of the stocks that have been holding up kind of nicely here. But again, since December, it had not really made any progress here. We have Invitae, and I should say that this list is not updated. I know that some of these stocks have been sold out of the portfolio. Some of these stocks are used to be in the ARK. This is not a completely updated list. I can make that for another video. This is just to give you an idea of some of the stocks that ARK Invest have been investing in over the last year or so. So as you can see, most of the stocks are actually showing the exact same pattern. They're moving below the 20 SMA, trying to get up and get shot down even further. And many of them are down like 40, 50, some of them even 60 or 70%. Now you could say, is this then not a time to buy? Because then they must be at least not as bad companies. Then they'll probably never get into being value stocks. They will still be growth stocks. And you should realize that the difference between growth and value stocks, basically, there are a lot of different definitions. But and a growth stock is a stock you buy without the stock or the company making any money, or at least it's not making a lot of money. But you buy it because you have some high hopes for the future and that it will double and triple and 10x the earnings, and then it starts to be a good investment. So you are buying it in the hope or the expectations that the stock will go up, and then you will make a lot on the stock. It is a high risk play, you could say. Whereas a value stock is a stock you're buying not really expecting it to blow completely up 10x, but you're buying a stock that produces a steady profit. It's a good solid business, and you're buying it because it keeps adding to your portfolio simply from the profits. So that's the difference here, and there has been kind of a shift, not a complete shift, but kind of a shift from growth that we have seen the last couple of years over into more value stocks, or at least more solid or stable stocks. So I'm not saying that this is a permanent thing, but I'm just saying that right now the investors, the large investors, are looking at this scenario and saying, yeah, well, Teladoc Health, I don't know the fundamentals, but they're not making any money as far as I recall, up here at a pricing at $300. Well, maybe we should try and grab some of our profit that we have made over the last years, 5 times our money here. Maybe we should sell it out now that the interest rates are coming up and people are getting a bit nervous, and maybe we should rotate towards some more value stocks. Now, as I said, I have no idea if this will last a month or a quarter or the next 10 years. And anyone trying to tell you that they know exactly where the market is going and if it is going for growth or value, you should not believe them, because nobody knows this. Whatever I can see in this chart is that they are going down. And since I am a trend follower, I'm not buying these stocks. I know some of you, as I mentioned before, are saying now they must be cheap. If it was a good deal at 90, then here at 24 it must be a fantastic deal. Yeah, well, maybe. Just remember that all stocks have the potential of going to zero. And no matter how low the stock is in price, if you buy it and it goes from 50 cents to zero, you have lost your entire investment in this stock. So I hope this gives you kind of a picture. I'm just scrolling through some of these stocks in the ARK, or at least some of them used to be there. Some of them are sold, and they have also bought up some new ones. I'm just saying that the last time I made this video, I can't even recall if it was at the end of 2020 or the start of 2021, I told you in the video that the downwards trend had begun and I would not buy into any of these stocks. I could have been wrong, and you could have been laughing at me in a year's time if everything went up. But this time, the trend following strategy actually was right. So this is what I'm trying to prevent in my own portfolio. I never ever have a stock that starts to make lower lows and lower highs. I simply sell the stock and I do not buy it. Let's just say it was Compugen here, I think it is pronounced. I would not buy it before it starts to make some really progress in the price as well. And before I could see that it turns into a green zone down here, meaning it is doing better than the market and has a good uptrend. So right now that has saved me from a drop from around 20 and down here at 63-64%. But of course, if I should enter this, I would never enter exactly at the bottom here. I would simply wait until it came up to maybe 12 or 14 or something like that. As a trend follower, I never get in exactly at the bottom. I never get out exactly at the top. I would probably get out up here somewhere, and I would have gotten in, I don't know, somewhere here down the 3-4 level if I had had that on my radar at that point. So I hope this makes sense, and before you start pumping my comment feed full of hate comments here, as sometimes is the case, I can handle it, so no problem. However, the case here is not to hate on ARK or any of the ARK Invest or Katie Wood. I actually like the approach. You just have to know what is going on in the market. And with a higher interest rate, with some nervous feelings around the tech sector, with a rotation maybe from the big players into more valuable stock producing profits, then we might see some of the, or at least many actually, of the ARK Invest stocks keep going down. So that is my concern here. And I urge you to be really, really careful not to fall in love with these hundreds and thousands of percentage of performance here, but simply look at the chart. Of course, you can like a stock and you can say, I think there's a good case for it. Just remember to be critical about where you get the information about the stock, because if you don't only get it from Katie Wood and ARK Invest and they are investing in it, then they might not be completely neutral in their description of it, because they like it to go up as well. Also, if you get it from any of the tech sites where people are really falling in love with the stocks, that is not a critical information as well. You need to make your own research and don't just fall in love with the tech sites. And then I suggest, if you want to be a trend follower, wait until the stock price have started to go up again. And I know that it is tempting to jump on it and say, I think the bottom is hit now. But yeah, you know the quote about the catching the falling knives. It is very dangerous and you need to be extremely skilled to know what you're doing here. So take care of these stocks. Again, I'll not predict where this is going. I'm just saying that right now the trend is down, and as long as it's going down, I'm staying away myself. Take care of yourself and your money out there. I'll talk to you again shortly. Remember to subscribe, hit the like button, all that. Talk to you. Bye.